Hey guys, it is Julie here with JT Wealth. In today's video, we are doing a quick update on NIO's recent sale of American depository receipts. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are going to chat about NIO's most recent sale of American depository receipts, or ADRs. We're going to go over exactly what that means and what it means for NIO as a company and just what updates we saw over the weekend. And of course, just before we jump into that, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you want some free stocks, make sure to check out the link in our description. Webull right now has extended their sign-up bonus to the end of December. So you get 4 free stocks just for opening up and funding a new investment account. So make sure to check them out. All right, now let's get into this NIO news, which originally started near the end of last week when NIO announced that it'd be moving to raise about $2.5 billion via a new stock offering. Now you'll hear this stock offering being referred to as an American Depository Receipts, or ADR. So just to clear up what those are, an ADR is a negotiable certificate issued by a U.S. depository bank representing a specified number of shares, often one share, of a foreign company's stock. So the ADR trades on U.S. stock markets as any domestic share would. ADRs offer U.S. investors a way to purchase stocks in overseas companies that would not be available otherwise. And as we know, NIO is a Chinese company who trades here on the US stock market, so that is why ADRs are required. Now, since the announcement of NIO's secondary stock offering, shares have been trading lower. And this comes after the company said that the planned secondary stock offering had priced below Friday's closing price. So they said this morning that their planned secondary offering has priced at $39 per share, which was a discount of 7.1% from Friday's closing price, just shy of $42, suggesting that the banks underwriting the offering needed to offer clients a bit of a discount to move the shares. So that's not generally considered bullish. But on the other hand, NIO's offering was oversubscribed, meaning that the underwriters opted to purchase additional shares above and beyond the initial planned amount. Back on Friday, NIO stated that they planned to offer 60 million shares, and their underwriters, Morgan Stanley and China International Capital Corporation, had the option to purchase up to 9 million additional shares. Now that was revised upward over the weekend. NIO is now selling 68 million shares at $39, and the underwriters now have a 30-day option to purchase up to 10.2 million more. So that generally is considered bullish. So what does NIO plan to do with this new funding? Well, it is said that the company aims to use 60% of the proceeds from the offering primarily for research and development of new products and driverless technologies. Around 30% will be directed towards expansion of sales and service network, while the remaining 10% will be allocated to general corporate purposes. NIO is set to enter the sedan market and plans on launching 2 back-to-back models, with the first one likely to be unveiled at the NIO Day event on January 9th, 2021. And they're also making efforts for international expansion, starting with Europe. Notably, NIO mostly raised capital via debt financing. However, it is opting for stock offerings of late, taking advantage of its meteoric share price rises. Towards the end of August, NIO raised $1.5 billion via its stock offering of 88.5 million ADSs at $17 per unit. Shares of NIO have had a crazy run so far in 2020, with the stock skyrocketing 944% compared with the auto sector's growth of 75% in the same time frame. So for investors, the good news here is that this extra cash will certainly help NIO expand and grow with their manufacturing and distribution capacity. The bad news, on the other hand, is just that there are more shares outstanding, which means a little dilution for existing shareholders. NIO has issued about 10% of shares outstanding so far in 2020, and repeated share offerings can be a warning sign to investors. But nothing bad happened to NIO's shares after their first offering back in August. We've seen NIO's share price just march higher and higher since then. So for auto investors who are thinking of NIO as a longer-term investment, here's what it all means. NIO is about to raise a whole bunch of money at a pretty good price. Sure, $39 is below where the stock was trading a week ago, but it's a lot higher than where it was trading a few months ago. The story of this offering is intact. NIO is taking advantage of the high valuation that has resulted from intense investor interest to raise additional funds to bolster its balance sheet. And that's still good news for the company, even if the price had to be discounted to make it happen. And analysts remain optimistic about NIO's future, with 2/3 of them rating the stock as a buy, and the other 4 coming in with a hold rating. Now, their average price target is around $49.84, currently representing about a 22% upside. Now, we haven't seen any analysts upgrade their price targets since the news of this second stock offering, but any adjustment should be pretty small. So there we have basically everything you need to know about NIO's ADR offering here this week and what it means for them as a company. As always, you guys know I love hearing from you, so please make sure to leave your thoughts in the comments down below. What do you think about this stock offering and about NIO as a whole? I know a lot of you are super optimistic about NIO and their future, so how do you think this recent price pullback has affected your outlooks? Make sure to leave it down in the comments. Just a reminder that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any trade should always be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day and cheers.